Alright, so you already know, bless up music, bless up vibes. It's Esikrana once again. We're about to do a little bit of analysis recap here. As I said, going into 2021, I'm really looking to focus in on gold. So I actually have some other ones from GJ here, but I'm not gonna go over the GJ ones. I'm just gonna stick to gold, going back over the gold because I really wanna focus in on gold and make it my pair, marry it for a few months at least. I'm looking at 6 months at least, maybe a year. If I like it, market conditions good, spreads stay good, then just keep trading it. But my short term plan is like 6 months. Um, so let's get started. Looks like the earliest date I have here is November 18th. So let's go into that. Um, looks like I was looking for, this is a 1 hour chart. Looks like I was looking for a little scalp. Clean break above 1883. There. Looking for buys. For my confirmations were seeing some USD weakness. Of course, global equities bearish, more fear and indecision around like Corona, the virus, I suppose. Here we have clean traffic above the 1883 key level. Lots of rejection on the downside, showing a lot of sellers exhaustion, failure to test previous lows. Price showing bullish momentum in the short term, been consolidating slash forming an order block slash generating liquidity since yesterday afternoon. Probably if I zoomed out. Actually, what I can do is, so I know the date is November. This is basically, I should have said this before, but basically the goal is to look at the previous analysis, then go back to the charts and see how it played out and maybe what I could have noticed at the time to help me plan out a better trade. Price showing, or to do better analysis. Clean impulsive break, looking for 1883 retest on lower time frame for a clean entry. So yeah, I mean I can't see what the rest of price is doing, so I don't know if I can see this downtrend here, this trend line here. But like I said, let me go back to November 18th at around 6 a.m. between early morning session and see what we have going on here. So I'm gonna jump to oh, I thought I could go to a specific date. Never mind, I cannot. So let's go November 18th at 3 a.m. Zoom in on the chart and let's see what we have. Okay, let me actually hide all of this stuff. Boom, boom. Alright, so let's go in and see what we have. So looks like what we have over there, 1883. Let me put that key level in. 1883. Alright, so this is the 4 or 3 a.m. This is 3 a.m. candle. Let's move forward to where we were. Forward 1. Okay, so exactly where we were. You can see I changed my color theme. You can see I've changed my color theme here just a little bit. But broke above. And so what I can see when I zoom out here is, okay, so we basically, buys are, I guess, so I was seeing a downtrend here. Where was I seeing that from? Did I mark this as a downtrend? So that just goes to show you how, I mean, I guess, but what looks cleaner, way cleaner to me is this. especially after that big drop, kind of seen that corrective move going up there. So this goes to show you how my perspective is shifting. That's another one of the goals, is to just see how, like, what I was seeing before and what I'm seeing now. Because when I did my journal reviews just recently, you could go watch that video. When I did those reviews, I saw some things that I was like, whoa, my eyes are opening wider. My vision is expanding. And anybody who's getting into trading, all the pros, I've been listening to a lot of pro traders, not just in the forex markets, but in all kind of different markets, equity, stocks, um, options, all kind of different traders, and they've all been saying that you should have a journal and you should be reviewing it, some kind of way of reviewing your past performance. But anyway, let's go back to what I was seeing here. So we broke above that key level. If I was trading based on the hourly, wonder what kind of a stop I would have. I'd want it below the hourly candle at least. So that would have been a 30 pip stop. Alright. I don't remember. I don't think I actually took this trade. I think I missed whatever entry I was looking for. But let's dive down to the 1 minute. Let's first go to the 15 minute and just see what it's like. Alright. So the 15 minute already broke up and it's coming down. Kind of tapped into the key level a little bit. See that rejection. This is at 4:45 a.m. So if I was taking this little scalp, my next target would be somewhere at these highs, or the key level if I just wanted to be safe. But right now, based on the 15 minute, I would want to see some kind of basically, obviously, some rejection here, which we probably already got on the 1 minute, and then like maybe break these highs or break. Let's see how the one minute's actually forming. Okay, so great. So if you saw my video where I was reviewing my my winners, my winning review, then you know that I look for these order blocks to form. Again, this is not, I'm not gonna try and say this is some original strategy I came up with. I mean, there's plenty of strategies out there that you can learn from other people. I learned this one personally from the Capital Hungry gang. But basically now it's just a matter of, since my bias is to buy, seeing this come down, reject, and then with this wick here from this bearish kind of principle, probably a little break of this area here, or if you want to be really risky, you can try to enter right here. Ideally, what would be even better is if we could see some kind of minor pullback, some kind of like little pullback down to here, and then bust up just to hit this minor bullish structure we seen here on the 1 minute. But if we don't get that, then the next best thing would either be another return to the key level, fail to break, and then continue moving up. Probably take a risky entry on the top here. If we see some rejection, you could take an entry as it's breaking here, or you could take an entry as it's breaking at the top here. But let's see what we get on this next candle. Alright, so this next candle came down. So you can see it's forming even a minor order block right here. Let me clear this out a little bit. So you can see we forming this minor area right here. Let's see what we do next. Alright, boom. Okay, so if you want to take a riskier entry, or for me, if I wanted to take a riskier entry on this trade here, that's what I would be looking for right there, and then enter on that. Spread would probably set me, let's see, that's 85. Spread would probably set me at like 95 or 1884, right? Let me just measure this out to check real quick. My gold spreads are usually somewhere between 2 and 3 pips, so something like that, huh? Let me zoom out a little bit just to see what that looks like. See if a position here would make sense. So if I got entered like that, and yeah, I mean a 15 pip stop sets me below the key level if I wanted to play it safe with a bit of a 20 pip stop. But let me see the RR on this, because I have to make sure it's worthwhile to take this trade. Okay, so cool. If I did want to enter right here, I could have a nice 2.8 triple R, 20 pip stop, almost a 60 pip TP, and like I said, if you really wanted to go for these highs there, it probably could be a safe target as well. Obviously, you would probably secure partials before you got to that target anyway, but let's see how this trade would have played out. Bam, stopped out. Okay, so you win some, you lose some. And you can see clearly what happened right here is we came to the top, failed to break these highs, and then boom, that big push down. Now remember, I did say the entries down here would be if I was trying to take risky entries. You know, rewind the video and see that I said that. Very risky entries, because ideally you would want it to break out of the order block before you take your entry. Alright, so riskier entries give you higher reward potential, but again, they're riskier. So a better entry would have been a break of these highs here, and we didn't get that. So if those were the confirms we were looking for, we wouldn't have entered that trade. Let's see how it continues to play out though. I'm gonna slow it down a little bit. And of course, I was playing that pretty quickly, but if by the time you entered right here, oh, where were we? Right here. By the time you entered right here, price did this, it did all of this, and then it dropped back. Boom, boom. By that time, and your stop is down here. Let's see where my stop actually was. Yeah, so by the time price did this, boom, I would already be starting to think of closing partials right here. You know what I'm saying? Closing partials just to make the loss smaller if it was coming. By the time we got down here, boom. If I haven't closed half yet, I definitely would have. Then boom, price came down to this minor bullish structure here, and then boom, broke down further below. So that was the analysis from 18th November 2020. So I guess if I did take that trade, it would have been a loss. But let's see how price continues to play out just a little bit. Like I said, that's a little bit slow now. Make it a little faster. Boom. So price came down, broke. Wait a minute. This looks eerily like a trade. Bro, no way. I think this is a trade I actually took. Hold on, let me check my journal real quick, cause it looks like I took those sales. I think that's the day, cause there was a day I remember I was looking for buys and I ended up adapting to some. Wait, is that day? Yeah, that's the day. Yeah. I remember. Okay, so let's go to my journals now. So yeah, winners. Here we go from November. There it is. You see that? So I actually had the same minor bullish structure formed. And I did take that trade that day, and it wasn't a loser because I ended up closing, like I said, I ended up closing it right there where that green line is. I think I had my stops there. So I entered, where did I enter? I don't remember where I entered at the first instance, but did I exit where I had the green line? I don't know. I exited somewhere. I don't think I took a loss on that trade. But anyway, price came below here, retested this minor bullish structure, and then as it was breaking these lows, that's when I took the sales, and it was a pretty good trade. So I actually did take that trade. You can see it ran. I took 27 pips out of that trade. But Yeah, see, good thing I was doing my journals because I almost didn't even remember that I actually took that winning trade. So yeah, like I said, risk management is very important because you could see on that day I did enter the buys, but I ended up saving myself a loss by exiting it when I noticed that price was not going in my favor, and then I ended up adapting to these sells. So let's move on to the next. Let's move on to the next uh, analysis, which is on the 22nd of November. What am I looking for here? I was definitely more. I marked out both areas here, but I was definitely more bullish, seeing as we were already on this minor bullish trend. This is the hourly again. So that's the 22nd. Let's go to the 22nd. Mm, can I? Oh, let me play. Just play it at high speed on the 1 hour though. Let's stop. Yeah, let me play that. Whoa, 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 whoa! There. That's fast. Um, it's the 19th. Play. Okay, let's see what we going. What we doing? 20F. A little faster. No, I'll leave it like that. Oh shit, we're on the 23rd already. Let's double back to the 22nd. At what time? What time was this? Oh, can't see the time. Oh, but I can see the price action though, and that's right there. Yeah. Boom, this little up and then down. Okay, so I mean we can already see what happened. So I guess we can't go in there. We can't go in there and try to take the trade. But what was my analysis though? Let's see. So gold has been playing in this bearish channel for over 100 days, broke out and then back in a couple times, blah, blah, blah. Heavy rejection right here at that key level at the bottom of the channel, of course. Minor bearish structure, okay, we broke that and then we started a minor bullish structure. Price failed to close above 1876 500 right here when these two wicks 1876 500. Then let me see, we bounced off of 1870, but that candle was still open. I don't, where did that candle close? That candle closed right at 1871. So we bounced off 1870, and I was looking for like to ride it up to maybe what 1883 at these previous highs. Um, See, my entry would have been at 1876 500, or if we broke below, did a little retest, and then came down, then I'd be looking for sells below these lows. But we'll be looking at the reactions at 1870 and possible rejections for a minor bullish structure for possible rejections of the minor bullish structure for possible risky buys to retest the highs recently formed at 1876 500. Safer buy would be break and retest of 1876 500 key level with target at 1883 key level. Confirmations: weaker dollar, weaker US equities, increased uncertainty and fear in the market. Let's see what actually happened that day. It looks like I have another key level that I don't have here right now. I don't know why. I think it's because, anyway, I'm gonna put it in, and I redid my key levels recently, so that's kind of why some are missing, which is clearly not good. I probably need to go back and do them again. But let's see what the vibe is right here, right now. Okay, so did we break this structure here we were looking to break? Well, I'm going by the wicks here. Based on these wicks, boom, boom, then I would say we broke it, and we definitely broke the minor. Sorry, we broke the key level. I was going to say minor bearish structure. We broke the key level. We failed to break these highs up here, like that. Just did boom, boom, failed to break those highs. And remember, my buys I was looking for up there. So we never got that. Let's see. This is not on the hourly. This is not a strong selling signal for me. If this is how the candle was to close, let's check the 15 minute and see what's going on. Okay, so you can see it looks like a break and retest. This candle is going back up again to test the key level, or maybe could come up to test the bullish structure that we had going on right here before it. Whoops, what did I do? Oh, I pressed spacebar. That literally always happens to me. Press spacebar when I'm trying to press Command Z. XAUUSD. Damn. Okay, bear with me, guys. This is the first time I'm doing. I'm just starting to do these videos, so just bear. Look. I can already see what happened, so it's kind of a cheat now. If I try to replay the sales, but anyway, let's see how we could have played it in either case. So, see how we could have played it. Let's see if the analysis is. Wait, no, this is the wrong date. Oh no, I'm on the 15 minute now. That's why I'm seeing this. I was like, wait a minute, where are the wicks? But then yeah, this is the 50 minute now. Yeah, we were right here just a second ago. So I would have actually taken the sell as we were breaking these lows. As you've seen, that's pretty much what I've been doing. So we broke down below the key level to the retest, and then I would have actually taken the sell here on this candle. This candle is where I would have sold, because we broke these lows just like my previous trade. Oops, wrong tool. We broke these lows just like my previous trade. And then my stop, of course, would have been above those highs there, right there, like that. It's probably like 28, 30 pips. Probably do a 30 pip stop just to make it round. 30 pips, and then, oops, what I do, shit. Of course, you have to accommodate for spread too. I did not, did I? Spread somewhere like that, because it fluctuates between 2 and 3 for me. 30 pip stop, and of course first target would have been right here at this key level. You can see price would have basically played around, well, not even played around, price actually ran after this candle. That's if we entered on a 15 minute. Probably I would have entered on the 1 minute, because that's where I usually enter anyway. But actually, now that I mentioned that, I am looking to, did it bring me all the way back to the beginning again? That sucks. I should have done the bar replay thingy. Let me go back to the 15 minute so I can. Again, bear with me here. These videos are gonna get better. I mean, I guess the good thing about these early stages is nobody's gonna really be watching, huh? So yeah, we already know that happens. So let me just go back there so it doesn't send us to the wrong spot when I switch time frames. 1 minute. Okay, cool. Look at that on the 1 minute. I like that because why? We got our minor order block forming, and this is, again, go back to my video where I'm talking about the setups, where I'm reviewing my winning trades. You can see this has been all my winning trades have, like most of my winning trades have been either this kind of bread and butter setup, this order block forming here, and then we have, like, depending on my bias. So if it's like, if I'm looking for sales in this, like in this case, I look for this like lower high within the order block, and then I enter as we like break in, or maybe break the lows here or whatever, or just break out of the order block itself, or I play the retest, which I notice usually happens after an order block breaks anyway. Play a retest like that, and then continue the trade like that. So that's how I would have entered this trade. Again, I saw it before I had a chance to do the bar replay thingy, but that was my analysis, was to take the sales below these lows. So the entry I just marked out here was a bit earlier, obviously, than what I had actually planned out here. But let's see. This is the hourly. Let's go back to the hourly just for a second to see how those exact entries that I planned out would have played out. Look at that. They would have played out pretty well, wouldn't they have? Um, this big ass drop. But yeah, you can see. So we came down to that level, respected it, went just bounced up a little bit, came back down, and then we just melted like all the way through a million levels. Um, gold. This is gold. This is the beauty of gold, huh? Anyway, so zooming in on the lower time frames. Let's see how I would have entered this trade. Okay, obviously the lower time frame bar replay is a little bit behind still. Let me just boom. This shit entered. This shit broke like crazy. I don't know if I would have entered like impulsively as it was breaking or what. To be honest, I wouldn't have had. I probably would not have had a sell stop or anything like that. The only way, whoops, the only way I'm seeing that I would have entered, because I usually enter on the 1 minute, like I said. The only way I'm seeing I could have entered this trade was when we formed this minor order block here once again. Bang bang. My same little setup, my bread and butter setup, and then just enter like risky entries would have been right here, or riskier entries would have been right here, and then a safer entry would have been when it actually, yeah, I would have gotten like a nice 15 pip stop or something like that, just above the area there, maybe 20 pips. Cause I usually do like 15, 20 pip stop anyway. Or that's what I prefer, I should say. Sometimes I try to cheat it and do a small stop to get a bigger lot size, but sometimes that bites me in the back. So you can see, yeah, I would have taken, and of course my first target would have been this key level right here. So I would have probably taken, I would have exited most of my position, like 50%, 60% of my position right there, and let the rest run. Runners would have done nicely that day, but that was my based on my analysis. If we followed my analysis like to the T, then my entry would have been as we were breaking this level here, this area of interest here, these lows here. So I don't know, maybe I could have played it with a stop, like a sell stop or something, or waiting until it broke this key level to look for an entry or whatever. But some way, somehow, whether it was up here, whether it was down here, my bread and butter setup given to me twice within, this is actually in the span of like 5 hours. So this one is the one I'd probably take, because at 10 something, I'm not even on the charts anymore. So anyway, moving on. So you can see in this case the sales played out. Although that day I was more bullish on it. I was expecting us to revisit the top of the channel, but we just ended up melting. That's 18. Price came returned to 1841.65, and the bottom of my channel is 1850 something, 1852. So price broke out of that little channel to the downside. Next, gold analysis is on December 6th. So these are when I started doing more top down analysis. So instead of just jumping on the hourly or 15-minute or whatever and doing analysis from there, I started to do it top down. So let's start with the daily here. I'll only do the gold charts. I won't actually go into these other charts here, like the volatility index, the US 30. These are all just like supporting charts. The dollar, obviously, you understand, because it's the secondary currency in the pair XAU USD. So that's why I would have the dollar. The others, if you want to understand that, like I said, I learned this stuff from Capital Hungry. So go check out Capital Hungry. But let's start with the daily here. Oops, I entered USD. Let's start with the daily here and see what I'm looking for here. Okay, this is very very basic, simple. Didn't even mark out a target, but looks like I'm looking for some kind of buys because I'm marking out clean traffic to the left. So I'm marking out this rejection here. I'm marking out that the wick broke the previous high. Week bearish close above 1836. This is looks like I did this analysis on the weekend. So we above this key level. So I'm saying yeah, we probably could return to this key level. Probably return to that top of that channel there. That's probably my analysis right there. This is the 6th of December. So let's go to that date. If we do daily like that, and then we just do boom, boom. There is this 1, 2, 3, 4. Okay. Is this it? This looks like it. This looks like it. Is it? Yeah. Yeah. Okay. Boom. Boom. Cool. Before we actually go into this, let's dive into the other pieces of the analysis. Let's scale in a bit. Let's go to the 4 hour. Do I have the 4? Yes, I have the 4 hour. So 4 hour looks like we consolidating here, and I'm looking for it to break to the top side, hit this top of the channel, and then bounce, and then go down to at least 1802, 1812, 1812, 1812, 1803 area. Sorry. Let's see the bias here. Bearish with short-term bulls. So short-term bulls, but more bearish. Vaccinations are to start being deployed in the USA and the UK next week, which will keep optimism up as long as they go well. Adjust my mic. There will be some short-term fear with the projected doses to be produced, dropping from 100 million doses to 50 million doses for 2020, but it seems to be fading because biotech and Pfizer are on track for their 50 million dose goal, despite regulatory and approval challenges. Global equities are looking very bullish, and the dollar is still very bearish. So with the vaccine optimism growing, I feel like gold can definitely have enough weakness to continue its higher time frame bearish trend. Makes sense to me. The fundamentals line up with the technicals. Let's see how this trade played out. Let's go to the 4 hour here and mark out that same area. I don't have my let me show these levels because I have them here. I just have them hidden. Okay, boom. So a little bit of foreshadowing here because I have my line already drawn, but so you can see we have this area here, right? That's what the area I have marked out. Yep, exactly the area I have marked out. Exactly. Okay, so we have this area marked out here, and I'm looking for, so I do have this key level actually this time. I do have this key level. Let me adjust it to, let me just round it off to 500 like that. As I'm here, I'm gonna mark F. As I'm here, I'm gonna mark this one out too. All rounded out. Okay. Let us bridge Jamaica. Okay, let's look to see where we could take our entry for a buy right there. Right. Okay. So what are going on there? You see, all the time frames just play out the same. I hope y'all cannot hear that dog barking, but if you can, my bad. My apologies. That's not my fault. Anyway, all the time frames just play out the same, right? So the same thing I'm looking for on the 1 minute, which is the order block, is the same thing I look for any time frame. And another, I'm saying all these, I'm just randomly plotting out my goals here just so I can keep myself accountable. But on top of sticking to gold next year, and on top of doing these videos more often to keep myself accountable when I'm trading, I want to start moving more from from scalping to a bit more like intraday. Some of my scalps could turn into intradays, but I've been like really choking my positions in terms of closing them like right at a key level, or not leaving any runners running, or just choking the position like that. But in the new year, I really want to focus on not only getting my good RR, because that's a big area for me. I need to increase my RR, but to switch to a more intraday type of a mindset. But anyway, I digress. I said that because I was talking about the hourly order blocks being very similar to the 1 minute order blocks where you're just looking for the same thing. But if I was here at 11 a.m., what am I looking at here? This is 6. Okay, so let's go. Let's fast forward to like this is 17, 18, 19, 20, right? No, that's 22, 21. Okay, so this is like 2 o'clock, 1 o'clock in the morning. 1, 2, 3. Boom. This is where I start to get onto the charts. So I come to the charts in the morning. I already have my analysis laid out. I'm looking to buy. All right. I'm looking to buy. Let's just zoom in on this area right there, and let's jump down to the 15-minute chart. Okay, cool. So what can I see on the 15-minute chart is number one, we have that type of vibe forming right there. So I'll ask myself a question, but more importantly though, let's put first things first. Let's delete this so we can do it in the proper order. Let's delete that because I want to do it in the right way. First of all, you have to mark out this extended structure right there. Can't ignore that. That's a stronger trend. That's the stronger trend in this scenario. Let me close this for more screen space. But this here I don't want to ignore. Perhaps I could ignore it, but do I want to ignore it? I don't want to ignore it. So like that. Boom. So we at the key level. We broke below the key level. So we can even mark out this minor structure right there. Very minor structure here on the lower time frames. Structures within structures, trends within trends. So you can see we are at the bottom. So one time I go be zooming in because I'm at the area of interest, right? I'm at an area of interest. I want to be zooming in to see what price does. So this is almost 4 o'clock. This is 3:58. Let's see what London Open does. This is 3:59. This is 4 o'clock. Okay, London Open. So far, we see some rejections. Let's see if we can break above the key level, maybe above this area. And then that would be a risky entry for the buys. Okay, no, we did not. Still playing at that key level. A really nice entry for a buy would be actually a pullback to this this structure right here, and then I failed to break and then continue up. But let's see what price does. Okay, so here's something I like about this, right? What I like about this is this big rejection wick down here, and then this candle came and engulfed this candle. Obviously, this weak ass bearish candle. So now you could say, let me try and see if I can test an entry here. Let me test an entry. Let me test a riskier entry right there with a 20 pip stop. You see what I'm saying? That's right below the wick. Let me test that entry. Did we accommodate for spread? Let me just put it a little bit up just to accommodate for some spread. Trying to move it. Okay. Right. Although, let me tell you what I do not like about this is that we did not break this area here. Did not break that area here. So that might be a bit of a red flag. But let's test an entry. Let's see. Because I'm also kind of, I guess back testing a little bit here as well. But let's see. Let's test an entry. Let's see what the vibe is. See if that would have been a good entry. Next candle. Okay. So one time, I don't like that. So I would have closed half of my position right there. Close half of that That little test of an entry right there. Bam. Close half of that. Boom. Stopped out. But, but, what did I say a minute ago? See, all of these lessons I'm learning myself. All this is lessons I'm learning myself. What did I say a while ago? I said better entry. Oh, well, I'm not gonna remember the exact phrasing, but basically I was saying ideally pulling back to this area here and then taking the buys would be a little bit safer. Would be a bit more ideal. So that little entry we tested there failed. We managed risk though. We cut our loss in half. Like that? Alright, you like that. Let's go. Now we kind of closing bullish again. Now, do we want to buy on the first tap and up? We just took a little loss test and entry there. Let's wait. Okay, so that's two 1 minute candles though. Let's not get crazy here because that's not some crazy confirmations. This is only the first 7 minutes of London Open. Let's see what happens there. Okay, so now I kind of starting to look like the looks of that a little bit more, right? Let's measure it out. Let's measure it out. Let's see if we have a good stop somewhere here. 20 pips would be down here. But this is not my bread and butter setup. This is not my order block. This is not my break and retest. So this is just a bounce of this area of interest here. Let me delete that for a second. This minor one. We remember we identified this one on the 15-minute. Let's just delete that because it's kind of not relevant anymore since price already came back down to here. Let's boom. Okay, so that's even clearer. I think I will avoid showing those like extra ones right on top of, because there's really no point actually when you think of like there's really no point. If there's one right there, why do I need one here? You know what I'm saying? So I'm saying obviously the one when you zoom out that's the one that's gonna be more accurate. But let's continue seeing how price plays out here. Okay, boom, like that. Now I want to start identifying that kind of area right there. Let me see what price does within that area. Okay, so you can see this candle. Now I would have been more like, alright, if stops now all of this is usually I do it like in real time, right? So when price is moving, I have like a 20 pip, maybe like a I'll even like have like a 18 pip what do you call this, range marker or range measure box thingy. What do they call this? Price range tool. I'll have an 18 pip price range box here, and I'll wait until price comes to my area, and then so I can execute on my phone, right? So I'll have these around and I'll just be dragging them around as price moves. That's what I do since I'm entering on the 1 minute, and sometimes you have to be faster. This is not a clean enough order block yet because price has only come down here like that, boom, went up like that, and come down here once, right? But ideally I would want to enter somewhere at the bottom of this order block, and it's boom, that's double bottom. But let's see how the next candle close, right? Okay, so the next candle close bullish like that, very small, very weak. How about we test the entry here? Let's see. Okay, put that at 18. Let's just put the stops at 18 pip instead of trying to accommodate for spread and thing, because that's getting a bit tedious. Oh, actually, let's do it the way it would actually play out in the market, because I would have a 20 pip stop like so. Let's make it accurate. Okay, that's not that much, but whatever. Next key level is where? No, the next key level is right here, and then the key level above that is up there. So the only reason I would enter here below this key level is because we're within this little minor order block area here. What is this area I have marked out? What is this area I have marked out here? An order block? Okay, back to the 1 minute. Anyway, so let's see how this is gonna play out. Boom. Not so good so far. What do we do? Because prices. I haven't won any trade. I haven't won any of these little paper trades. But and again, we back testing. We testing shit. Let me see what I can notice again that I did that I ignored on that entry right there. I ignored this, didn't I? I did. Ignored that. Um. Um. With that candle closing like that, but still within the order block, I would like to see how the next candle close. Oh wow, we almost that probably stopped me out. Honestly, that stopped me out because spread that stopped me out. That's a 20 pip stop. Um, 20 pip stop. But that big rejection does look nice though. Okay, now for sure, if that didn't stop me out, I'll close half. Close half, and now I'm definitely out of the trade. Let's see how it played out. Did price even move? Okay, so price actually moved down. How could we have executed this better? Let's see. Number one, we ignored this. We ignored this minor bearish structure. Ideally, if we had identified this, it would have been more prudent to wait for price to break it before we just enter the trade. Number two, we did say that I did say that that was not a proper order block as yet because we only had this one, two, like that. Ideally for order block, like really nice order block, I want to see something like that. And by the time it came down like the third time, then I would say, all right, let me see if I can take that buy, right? But right, I didn't get that. So that's just notes to take, notes to take. I'm gonna be rewatching this myself just to learn. But notice where price came down to and reacted right at that key level, huh? So right at that key level, and yeah, that's that. So I guess for this analysis, well, hold on, because this is the 4 hour. We didn't even drop down to the 5 minute yet. I was so hasty to get on the charts. SMH. Like I said, guys, bear with me. I'm gonna do this better at some point, right? I'm gonna do this. I'm gonna do this better at some point. I'm gonna organize them in a way where I know the order of things, the way I want to run it, and I'm gonna do it better. But looks like price came all the way down to this bullish structure here, and I was looking for risky entries on our way back up, medium entries above this big region I have marked out here, and safe entries above 1852. So we're still on the charts here. Let's go to the 5 minute. Let's go to the 5 minute and see what just happened. Let's zoom out a little bit and see what just happened. So what level is this? Like 1830? 1830. Cool. So with that new information we just got, by new information I mean the new candle that just closed. Those new candles are just closed. I'll line up that with my key level. Line that up with my key level, and let me see what's going on. Let me see what's going on. Boom. Now, honestly, this just lines up to be way better of an entry, right? That would have been a way better entry to take because why? We have all these rejections here. You at a key level. Key level. We now adjusted our bullish trend to line up with the key level because price is still very bullish, yeah, right? Even though we had this price this small drop here, we had this projection, and price is still closing like still trending upward like that. We're not really trending downward heavily like that yet. Not yet. Like I said, we couldn't ignore, shouldn't have ignored this, right? So that's why I marked it out in the first place, because it was not to be ignored. In hindsight is always 2020, right? In hindsight, when I after I marked this out, how could I have identified this structure? Well, I could have, right? If I came back to the beginning of it, because I do this sometimes, right? When I'm looking to see like how I could see where the trend actually is, like where it should be touching, because gold does these kind of trends a lot, where it just like it hits it, it floats up it floats up into like space, and then comes back down, hits it, and then like that's the actual touch, and then it goes does that again, and then hits it, and so the beginning, I usually go back to the beginning, like kind of where it started forming, and see if I could identify its trajectory, kind of. But I haven't back tested that enough. That's just an idea I have in my head for a while. But let's go down to the lower time frame still. I still see no order block formed. Okay, but what we have here though is, let me draw it out for you. Bang, bang. But that's the 1 minute. Let's check the 5 minute. Two 5 minute candles close back to back. Let's measure the range. Too many pips. You have to enter with like a 50 pip stop. Otherwise, if you wanted to enter with like a 30 pip stop. But honestly, let's see where the next candle closes. That's a weak candle. Okay. Pulling back a little bit. Now, I mean, it broke a tiny bit, but that's not really a break, right? Okay, so what we have here now? What do we have here now? So we can see this area of interest here. We're on the 1 minute. Okay. Forward. What we have? Weak. Okay. Okay, very interesting. You can see price squeezing right in that area right there. Let's wait for a confirmation, or see if our order block is forming. So what we have going on right now, is I see this order block forming, right? Delete that, keep it a little bit cleaner. Right, so I see that order block forming, and I see higher lows in this order block so far. Okay, that's a very impulsive candle. This is at what time? 5:01. So a new hour just opened. A new hour. This is the first. This is the first of the new hour. So it formed. New hour has formed this bottom wick so far. Then busting up like that, respecting this little area here. Should we test an entry when we have these higher lows? I believe we should test an entry. Ideally break above, but I'm really wanting to test these entries within the order block to see how they're gonna play out. Where's my stop? Let's make it 30 pips below the key level, below this order block, below the key level. Let's see. Bam, breakout. Now this is where normally I look for my entries. But like I said, I'm trying to see how I can identify entries a little bit earlier. This sometimes, the reason I don't like these sometimes is because this is kind of an impulse break. You buying right at the high. Like price is moving up, and you buying as it's high. Like I like to wait for either like a pullback or somewhere a little lower than, these areas of interest. So we broke above. Wow, look at that big impulsive drop back down. close half of the position right away. Not even hesitating with that. So that now becomes a top. That now becomes the top of the order block. And then watch that play out. Okay. Okay. Again, rejection at that area. That was crazy. So we already closed half of the position, but we still in, right? So we still in though. Next couple candles. Let's see how we roll. I'm wondering if I'm gonna go to the trouble of entering like earlier, right? If I go to the trouble of entering earlier, let me just adjust this as we get this new information coming in here. If I'm going to the trouble of entering in earlier, probably I won't enter with my full risk. You get me? I'll probably enter earlier and then try and scale in an entry, right? So would I really be closing half of a position that I already opened at half risk? Probably not. If I did open at full risk, so when I say close half, assume that I opened it at full risk, and if I open it at half risk, I'm not closing half because I already opened it at half risk. So next. Okay, now we finally got the breakout. Finally got the breakout. So you can see again, this is the bread and butter setup that I love so much, just order blocking, and boom. I was a little bit quick with it right here, but again, with this stop, my stop never got taken out, so some never got taken out. So let's play. See if we can hit the target. So you can see some reaction here at the bottom of this large gray area that I have marked out a previous order block on the higher time frames. At this point, so oh shoot, damn, I did it again. Oops, I did it again. This time I press space because I'm accustomed to pressing space to pause and play. Trading view, think about adding that as a feature. What are you doing? What date were we on again? The 6th. The 6th. Oops, I did it again. Okay, so let's fast forward a little bit to where we were just now. Okay, I believe that's where we were. I believe I could fly. Right, we already ran through this a bunch. Boom, the breakout, and let's slow it down just a tad to hit play. Okay, once again, we looking to see if price is our target. I just spoke about the reaction here at the bottom of the order block on the higher time frame. Okay, so important thing is, I was about to press space again. That would have been really dumb. Important thing is still kind of trending up like that. Just minor trend line. This is the 1 minute, so this is not some kind of strong confirmation. The trade is up. The trade is up. Where would I have scaled entries? On the pullback. So if I did enter half here as opposed to enter my full position, once we broke and then we pulled back and made this like first bullish candle, probably I would have probably taken an additional entry, set my stop. Let me see if I would have had the leeway Yeah, so 20 pip stop like that. Um, and if we're respecting our minor bullish trend line, then it should never get to that area. What just happened? My screen froze. Okay, so again, when I'm on these lower time frames, I always like adjust based on the new price action I see, because we're kind of identifying it as it's forming. It's not like a higher time frame when it's been trending like that for a while now. It just, oh, so boom, this position would have got taken out if I'd entered it. If I'd entered it, and now we would have been back to close to the entries of my first position. How deep did we just go? Let's see. Because usually I take profits at like 20, 50, 20 to 30 pips. Oh, wow. This trade already ran for like 50 pips. Wasn't even checking that, but our stop here is. It already ran for like. Okay, realistically, let's call it 45 pips. And our stop was 30 pips. I usually secure somewhere around the same as my. The same as my stop. I would take like. I like to do maybe 3 or 4 exits on the trade. um Unless it runs like right to, like, sometimes, like if I get a move like this and gold moves like really far, then I won't close out like thirds or quarters, then I'll close like half or more. But somewhere up here is where I would secure some profits. At like 30 pips, 40 pips, secure some profits, and then let the rest run. um let's go. Let me actually pause this. So you can see what I'm talking about here, right? Boom, boom, boom. We going. And at this point, it's 7:38 in the day. We entered over here. At this point, we scaled out like a portion of the position already, and we letting it run. Okay, so we back at these previous highs. Seen some reactions there. Extend this line a little bit. See what we getting. So this move is looking very corrective versus this previous drop here that just went boom. Now this one is kind of just inching its way up very slowly. Still bullish trending, but okay. So we just broke these highs here. Price came down again. Gold is crazy sometimes, I swear. And you can tell this range, this move was like another 40, 30, 40 pips easily. Okay, so we comfortably broke the highs and looks like we're forming a minor order block just above. Let me zoom in a little bit so you can see. And price hit our target. So we exited for 98 pips. This took some waiting, right? Some waiting. These are the trades I want to go for a little bit more. These intraday trades. So I enter that. Enter that. Right. What I enter again? Right here when this candle was impulsively moving up like that. That's like 4. That's like 5:01. 5 in the morning. Yeah, right. Because I said, okay, new hourly formed the bottom wick and then we going up. So let me enter 5:01, and it hit target only at like 9:44. 5, 6, 7, 8, 9, almost 10 o'clock. Almost 5 hours of waiting. Like 4 hours 45 minutes of waiting. For this trade. So that's a cool, clean intraday trade to me. That's the trades I want to go for more often. You can see this trade was a 1 to 3, a 1 to 3.2 thereabout, because we had a 30 pip stop on it. Looks like we didn't even need a 30 pip stop. Looks like if the stop was right below the order block, it might have worked, but that 30 pip stop was yeah, it was pretty good, for 30 pip stop. But so my targets got hit. We scaled out some of the position here at like 30-40 pips. Then price ran. Assuming I didn't take everything off the table, because sometimes you leave a runner. Let's just play around with the idea of where it would go. So far, what did we get here? We were looking at the riskier entries at like 1838, and where did we enter? Oh, shit! Look at that, bust up like a crazy killer. 1828. So, like $10 cheaper than what we planned. 1838 is right here. Yeah, 1838 would have still been a good place to enter, because look at what happened right after 1838. Just as I was looking at it, I was like, oh, 1838, break a little order block here, and that's exactly what we had. Boom, bam, that little order block formed right there. We had the typical within the order block here. Boom, I would have probably entered, knowing myself, entered like when it was coming back, see if I would look for like the retest of it as it was coming down, or entered like right here. Taking a nice 30 pip stop on it, just below the order block, somewhere there, or maybe when it retested or whatever. But as you can see, that riskier entry, sexy, huh? One time, run to target, which was at the next key level to key level, like that. But that is because I remember that's why I missed those trades that day, because I'm normally off the charts by this time, right? I used to trade from 6 or from 9 from I used to trade from 8:30 to 11:30. Recently, then I moved to 6:30 to 9:30, or 6:30 to 10, and then now I kind of do in London session at like so I wake up at like 2:30. I do my morning routine, and I'm on the charts around 3:15, 3:30, and then I normally leave the charts either when I caught my or trades, or when I hit my max loss for the day. As time goes by, I definitely want to extend my trading hours just a little bit. Like probably come to the charts a little bit later as well. Like instead of coming at 3:30, come at like 4:30, halfway into London Open. Although London Open is an hour forward right now, but it's gonna switch back to 3:30. So yeah, let's come to the charts around 4. Let's just call it 4 o'clock, and leave the charts around like 10. So 4, 5, 6, 7, 8, 9, 10. That's like 6 hours, and that wouldn't be a straight 6 hours, because I would take like a break or breaks in between, obviously to eat breakfast, because that's early in the morning and so on. But anyway, I'm just blabbering on right now. So you can see our risky entries played out. Our medium entries, I'm not gonna go play out through the whole process of taking the medium entries and whatnot. Medium entries and safe entries, let's see if they would have played out. Medium entries were at 1844. Right now price is at 1861. So 1844 was here. Yep, right above the zone I marked out. You can see we had that little area just here where price came up, kind of broke down a little bit, and then boom, you could have entered at this candle here when it kind of busted above these highs, entered on that candle here for the medium entries. Safe entries were at 1852. Boom, 1852 busted through, same thing, came up down a little bit. Boom, you could have entered when it broke this high or broke this or entered on that candle, whatever. And target was looking like 1855 for all of them, with possibility to extend to the structure. And I believe that is what. Nice, nice. So yeah, that's pretty cool right there. The target again was 1855. That already hit. Was it? Wait, sorry, that was the entry. No, no, that was a entry was 1852. Target was 1855. 1852. Target 1855. Well, it looks like here I have the key level at 1861, and that's a lot more accurate. So, but either way, 1855 hit, passed, busted through. So all three of those entries, risky, medium, and safe entries played out nicely. Safe entries played out for a lot more than I had planned, so that's good. Um, let's see, couple more. We have a that was the 6th. Let me see, how long is this video? An hour. This video is an hour so far. Okay, hold on, hold on. Let me see. I'm gonna continue going though, because this is like analysis from weeks on weeks on weeks, so it should be pretty long. But as I go forward, and especially with all my extra talking, as I go forward, I'm going to do these like on the weekend. Like, so after each trade week, break down my journal, break down my analysis, break down my winners, break down my losers. That way each video is shorter. Or if I decide to compile those different points into one video, then it'll be long. But most likely I would want to break it down into different videos, because I personally want to go and review these videos, and I want to make it easier for myself to find what the heck I'm looking for when I'm going back to try and review my performance. So again, what date was this? I keep forgetting the date. We were at the 6th, right? So next date is the 12th of December. Open this. Okay, so it looks like I only have one chart here, and that's a 4-hour chart. Let's go to that date one right away, just so we can see what is about. Oh wow, look at that 4-hour candle go. Okay, so that looks like it was. Whoa, stop. Let me open this properly. Okay. Sells now. Sells now. Okay. So, boom. We're not there yet. We're not there yet. And boom. There we go. So, sentiment. Vaccine optimism still strong. US dollar still weak and formed order block above previous weekly lows. So this is basically a continuation of my the last week's analysis. So you can see it played out really well. Let me just go back to that for 1 second. Played out really well on the 4-hour time frame. You can see I was aiming for it to go back up here and then drop at least to 1803. So far it dropped back to so far it looked like it dropped back to oops. So far it looks like it's dropped back to 1828 thus far. 1828 level, that's where it came back to thus far. So so far so good. It's playing out well. Came back to this order block area, the area where we took our medium risk buys above. So now we're looking for high risk entries at a retest of 1842, and then medium risk at a break and retest of 1836, and safer sells at a break and retest of 1828. So US dollar still weak and formed OB above previous weekly low. VIX made a pullback to retest previous lows but failed to break above, respecting bearish market structure. Global equity is still very bullish. Bull run up to create a lower high at top of our weekly bearish channel. Okay, that's the lower high I'm talking about here. Lower high respecting extended bearish structure. Bearish trend within the trend forming on an intraday time frames. This is what I'm talking about. I already marked out these entries. My bias sells. As long as equities globally remain bullish, the US dollar holds its weakness, the volatility index continues its bearish trend, and the optimism from the vaccine rollouts continue to flourish. I see gold continuing its extended bearish structure on the higher time frames, especially as we had made lower highs in the past week on the higher time frames. All right, let's go to the let's look at these. Oops, shoot, this is what I'm looking for. Just looking at these trade paths. Okay, this is the 5-minute chart. Okay, so one time, cool. Close that. So boom, you can see, let me just extend, oops, let me just extend it. Nice. Righty out. Here I'm looking to take it to 1803, and here I was looking to take it to, yeah, same level. Okay, cool. So it is really just an extension of my previous analysis. Let's go to the hourly, because we are at the top of this area right here, seeing if we can how you say, take entry on this chart right here. Big so we have an immediate, I can see a failure to break these highs over here. These highs are at these previous weeks. Let me actually extend that a little bit, just like that, just like that, and then on the hourly, just like that. Let me just do something like that, and then hold on. Actually, I can do it a lot better. I already had it in the analysis, so let me put it here. I already had it like that. See, just like the analysis. Okay, and so right now, the first entry is looking for pullbacks to 1842. Do I have 1842 marked out here? No, I don't. I have 1838, 500. It just seems like a pretty good level too, but 1842 looks like it lines up well with the structure. Eh? So let's see if we got that. We dropping. Okay, so my next entry was a break of 1836. Where's 1836? Oh, we just broke 1836, didn't we? No. Yeah, we did. We just broke 1836. Now, good time to zoom in. Good time to zoom in. Now, so you see on the 15-minute what happened here. Break of this key level here, 1838, 500. Retest. Drop below. Entries would have been somewhere right here, right? As you know. Breaking the lows. What do I see here on the 1 minute time frame? I see these lows being broken very slightly, my friend. So you say we look for entry soon. Essentially, so we never got these pullbacks to 1842 here, right? We didn't. 1836, we kind of already did a small retest on that. 1836. Why don't I have it marked out? That's what I'm wondering. Like I said, I just redid my key levels. I didn't zoom in as much as I was supposed to. Probably is why I don't have these levels marked out. Either way, I can mark it out right now. Okay, so you can see we came down to 1836 once, came down to 1836 twice, and this is a minor order block, isn't it? Yes, it is. Bread and butter setup? Yes, it is. Wow, I just drew that so obviously. There we go. That's something better. So now, basically, pretty much, we're already below that key level. Came down, came off a little bit of retest. We're basically just looking for a little break right here. And once we get that, we're taking an entry. Oh my goodness, we didn't get the confirmations, but that was a big ass candle right there. And we got the confirmations to take the trade. So let's enter. What time is it though? This is not the time I trade. This is not even the time I trade. So unfortunately, cannot capitalize on that opportunity. But if you were at the charts this time and you took an entry, I wonder what would have happened. Let's see if we had a. Let's see if this is not as big. I'm just way zoomed in. That's why this shit. This is don't zoom in too much on the 1 minute chart. Look at that, 30 pip stop, perfectly just above the order block. You know what I'm saying? Took your entry. Play that. Yes, he got stopped out. Though you never know, because did it really get stopped out though? It could have. Oh yeah, that wick would have stopped you out for sure. Okay, so the person who was trading at this time, hard luck if you took that entry because you would not get stopped out. Now, what? Let's just assume I was trading at that time, right? What's bad about entering right there is that you entering sales at the low. The idea with this within now, if you don't take the break out of the order block, the idea with entering within the order block is to get the trade you're looking for from either the high or the low of the order block. So if I'm looking for sales, naturally I'll be looking for them up here, not down there. Now if I'm there, if I miss the ones up here and I got to enter down here, then I'm more likely looking for it to break before I enter. However, if I can get the entry up here, then my stop can be nicely away from it and I can be safe to just ride it out until it breaks. And if it breaks to the wrong side, then I'm managing risk to make the loss super small, or just exit and look for a better entry if it is a deeper pullback of some sort. But let's go to forward to my time, which is at my trading time is at all the way over here at 3 a.m. So I'm gonna play it really fast until we get there. Seeing how it just moves through these levels. So we didn't actually get the bread and butter setup with the lows, because look at where that went. Look at how the price moved. We're still in this little order block area. Now we getting that. Now we getting it. You see? So that's the thing. That's the thing to identify. Like, I need to learn better how to identify what is, especially when I'm on a 1 minute chart, what is just these candles going back and forth, and what is actually a pullback to form a lower high or lower low or whatever. Because maybe I could have seen this was the lower high or whatever and then entered the trade. And if I did enter the trade from here, I mean, I wouldn't be able to enter the trade from here, because look at the candle spike, and then it didn't really give me another candle, a smaller candle to close below. It just went all the way here, and then I entered, right? But if I did enter from here, the stop would have still been fine, right? But you can see that bread and butter setup, which I've been identifying all throughout this video, here we finally get it much cleaner. You can see that just floating like that. Now my entry would have been somewhere at the third tap, boom, third tap somewhere up here. Try and sell that. You check what I'm saying? But again, I wasn't at the charts them times there, so I wouldn't have been able to capitalize on that opportunity. That's fine though. So let's go to my time. Continue. Just have to stop for that moment. Bam, 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 and slow down a little bit at 3 a.m. Now let's play it a little slower. Okay, so I come to the charts. It's a little after 3, yeah. It's normally around the time, average time. Come to the charts, 3 a.m., 3:15, 3:30 for the latest, normally. Oh, speaking of wake up times. Anyway, forget that thought. Here I am on the charts. Coming price here within a big range between two key levels. Looking like it's going down towards my extended bullish structure. We have a minor bearish structure here of kind of an intraday strength. We have this very minor bearish structure here within this order block that we just broke out of, and now we're starting to kind of consolidate again at the bottom here. um you see that, you love that, you feel that. Okay, we had one top, bottom, top. Let's continue playing, see where we go, see where price goes. Okay, so price broke out, right, break and retest, double whammy. Next candle, oh, not good, not good, not looking to enter nothing there. So I would say if it kind of broke nicely, then it would have been maybe a nice entry. Although these entries like in the middle of these zones here, not closer to the key level like here, not within these larger order blocks. This is a much smaller kind of order block here. Let's see what happens. Right to the top of the order block. Are we looking for sales? Yes, we are looking for sales because we're in a minor downtrend. We're looking for safe, risky sales. 1842. We already broke that long time. 1863. We at 1833 right now, just above my safe entries. Right. We at 1833, $3 lower than my medium risk entries, which we missed already because we were not at the charts. Because like I said, these analyses are usually done over the weekend, so you can plan the trade, but you cannot control the time of the trade. This is the 8. This is the 330 candle, 331 candle. Let's see. This is the top of the order block. If we're looking for sales, might as well test an entry somewhere here, right? Price did this little pullback, probably get entered somewhere around there. You have ample space. Oh, ample space to put a nice 30 pip stop. Or if you wanted a 20 pip stop, you could do that because it's close to the key level. See where it's at with the take profit. That's a pretty good RR to me. Let me play it. Okay, came back up, test the structure, came back down, broke below. Let's extend this. So we came back up, tested the structure. Now you can see much higher quality entries would have been at the test of that structure, right? But again, with a safe stop loss above it, we were alright. Now the bottom of this order block is now here because you can see it double bottomed out right there. So right then I would have been a bit more cautious. Maybe if I was shaky at that point, then I'll start to look to manage risks somehow. But we're still in profits. So right there, you see right there, and let me extend the top of this too because we have that area up there. Right there, then I would probably look to close half. Not at the first one, just because we did have that structure to come up to test. But maybe I would have closed half. But again, did I enter? Well, that depends on what I entered with, what risk I entered with in the first place. Okay, nice. And what did we get? Our bread and butter setup. This setup happens so often. I could probably just take these setups only and just be like, yeah, look at how many times it happened within a short proximity. It happened up here in a bigger area, happened down here in this smaller area, and every time after it just drops. The hell? Like, and I went back and looked at go back and look at that video of me reviewing my winning trades from the last quarter of the year. Most of them are this setup. A couple of them were like break and retest setup, like a quick break and retest. Majority of them were this, and like one of them was an impulse entry. And most of my losses were impulse entries, so I need to stop taking those impulse entries. Impulse entry, how many times? How many times can I take impulse entry? Now, if you notice something really interesting here, I took this entry over here. Didn't wait for this like kind of shape to form here, or these lower highs. But even if I'd entered at this candle or at this candle, the entry really wasn't that much different. You get me? And then I would have to deal with much less drawdown on either one of those entries. No drawdown here, much less drawdown here. Some drawdown here, but that's fine because it barely even did it even go through half my stop. Just under half my stop, so that's not even anything. and price is currently right now we up 34 pips. My stop is only 20 pips, so yeah, um scaling out a percentage of the trade here just to secure some profit and let the rest run. Normally, a mistake I was making was during these pullbacks here to scale out again, but I'm really needing to stop that, so I'm not gonna be inclined to do that here. Obviously, this is just paper trading. If I was on the charts, the emotions would feel a lot heavier, a lot different. So that's why, and that's why I usually close it early anyway. Honestly, when price comes that close to my target, I normally close as well. So maybe that's something I need to work on as well. Although in this scenario, it wouldn't have hurt me as much, because I mean, honestly, that's 65 pips. If I was risking 20 pips, that's already over 1 to 3, and price was only 10 pips from my stop. So from my TP. So yes, normally I would take the if price came that close, right, to my exit, normally I would exit, right? I was going for 70 pips, but you can see it came up again and hit my take profit. So it's like a balancing act of, I mean, how much am I really willing to hold it? Because look at what it did next. Shit. Um, After it hit the key level, that's a great reaction. Just that quick bounce. Sometimes price just does that. That's crazy. Anyway, I did enter the trade sometime at like 3:32, and then would have exited. It hit target at 5:07, so that's the next like hour and a half, hour and a half trade. My actual exit was at 4:55, 4:56, 4:57, thereabout, whatever. Um, so yeah, and let's look at and that was $10 above my actual plan entry. My plan entry was 1828. I entered at 1838. No, I entered at 1833. 1833. So about $5 above my. Did I say $10? $5 above my planned trade, and 1828 was right here. Look at that retest of 1828 area. Although 1828 itself, was it 1828 straight? Yeah, 1828 straight is what I had on the chart. But obviously, you know, despite what I have on the chart, you're looking at price action, right? But 1828 is right here. If I had taken this trade, would have been a lot less reward. That's why the riskier entries or the medium risk entries are my preference. Nice. Look at that. Straight to. Oh. This was another foreshadowing line I had drawn here from my previous days of watching the charts, and forgot to remove it before this little video session. Anyway, spent enough time on this analysis. I believe I have only one more to go over, don't I? So we did 6, we did 12. Yeah, the last one. And if you made it to this point in the video, thank you for sticking through all this analysis breakdown. Last one, 19th of December. We have. Oh, I have an after shot here. Daily. Let's start from the daily. So, I'm looking for price to, since I'm seeing some reactions at 1891, return to this strong level. See how many times we reacted at that level. So I'm looking for price to return to 1862. Reaction at key level 1891, also previous high. That was previous high. Price reacted there a couple of times. After that reaction, I'm looking for it to go down to another strong level here, because we just broke that level and we didn't return to it yet. And when a strong level is broken, normally you see that retest. So I'm looking for it to be in this intraday bullish trend. We had 2 taps so far. I'm looking for that 3rd tap for it to continue up. Possible retest of 1862, since recently had an impulse break, also lines up with bullish structure. Perfect when a key level lines up with the structure on the higher time frames. I would say that's like a 4-hour perspective in terms of that bullish. And then this is my daily, weekly type of vibe. So that's what I'm looking for from a daily perspective. I guess we don't have to go back to the charts because I have the after picture, which now that I think about it makes so much sense. That's probably what I'm going to do to keep these videos short. Instead of going back, I'll do my back testing probably something as something separate. Maybe as something separate. Anyway, I'll see. I'm still formulating these ideas. So my idea was that, alright, if price is here right here and we seeing this kind of, we in this between these 2 key levels here, we kind of went up, we've kind of lose some steam going down there, but these big rejection wicks did painting the picture that price, this is the area, premium price levels where institutions would be selling at, because price came up there, just the sellers entered the market and boom. So I'm thinking since price didn't bust back up and fill these, they probably sit in their positions, right? Obviously some people exited right here. Some people exit, but that was before these weeks anyway, so I'm not watching that. Some exited right here, that's why we have this pullback here. But still, we failed to return to those levels. So I'm thinking my first thing I mapped out was this. Like that. Oh, excuse me, that's my alarm. 6:30. Start my nighttime routine. But anyway, first thing I marked out was this here. Because I'm like, okay, cool, clean move down to make the 3rd tap of the trend line, just like I showed you on the daily a second ago, and then boom, we're going to bust up back up to the top of the channel, right? Then I was like, price could break from where it is right now, because it did do a little bit of a pullback. I don't know how much. Let me see what level, what price, from around 1896, 97 area, all the way down to 1882. So that's what, 10, 11, like 14, if we're talking 1896. That's like, yeah, a $14 move, 140 pip move down. So I'm thinking that might be the move, and then it might continue moving up. So I marked out both, and I was just gonna watch price action and see what happened. This video is getting long, so let me just pull up this is my in-depth analysis, just talking about, I'll leave this here for a second. You can pause it and read it if you want. Now let me close it and show you what happened. So gold, the daily, boom, that's what I was looking for. Once again, down, and the after picture just as I had. Just as and by the way, if y'all think I'm just using replay or something to try and gain clout or whatever, check the dates. Trading View screenshots that's not like my computer screenshots. That's downloaded off Trading View, so you can peep the dates, dog. December 19th, and then boom, December 24th. That's Christmas Eve. I took that picture. Check what I showing you. The markets were closed them time there. But anyway, you can see we did come down to that level, and we did start moving back up. Remains to be seen when markets open again next week or whatever, if we're gonna actually return to these levels, or what price is going to do. But so far so good, the analysis is playing out. So with that being said, I'm not gonna go back and actually do the back testing on that, because I'm kind of tired right now, and my alarm just rang, which means I need to get off this computer and go Go take a shower and read and do stuff like that to wind myself down for the day. You know what I'm saying? Today is Boxing Day, the day after Christmas, and I hope everybody had a good holiday season. Season's greetings, late season's greetings, because John knows when I'm going to put these videos up on YouTube. But thank you for watching. Thank you for sticking through the vibe. Um, yeah. Bless up music, bless up vibes. We can exit replay mode. Like I said, more videos to come Forex wise in 2021. I want to use my channel to. I've always wanted to use my channel to put out whatever channel it was. I used to have a previous channel. You can go check it out. It's featured on my this channel, Esikana. You can go check it out. It's called Nas Saint Lucia. And at the time, I featured what I was into, skateboarding. You saw some music in there actually. If you dig in, some music and sailing. This channel is obviously Esikana is what I make music under. But Esikana is my brand. Esikana. Um, what I'm into right now is music, forex trading, and generally still outdoor stuff, still skating, still biking, just not skating as much. So you might see some other outdoor activities. It might include sailing as well. You know, even calisthenics has been what I've been more into the past few weeks. But anyway, thank you for watching. Make sure you subscribe. Stay tuned. I am not your Forex mentor. I am just documenting my journey, trying to learn and trying to keep my mind in the right place, trying to enjoy the journey as much as I can because this is a skill that I really want to learn. I'm not going to start telling you about how I got into it and when I first started getting interested. All that will take too long, and this is already too long. So what I will say is bless up music, bless up vibes. We focus more on the vibes today, and I will see you in another one. You don't know. Respect, guidance, everyone.